Thanks for clicking. The Toronto Regional Real Estate Board just released their numbers for the Toronto real estate market for the month of August, with prices down for the most part and inventory up across the board. However, some are starting to wonder, given the rapid decrease in real estate prices we've seen Canada-wide, and definitely in Toronto, is now the best time to be purchasing a home? Is this the right time to buy?
Yes!
So what I want to do today is go over Toronto's real estate data for the month of August, take a look at whether or not this is indeed the best time to get into the market, and then take a look at what to look for next. The Bank of Canada is set to make its interest rate announcement in just a couple of days, which will obviously have a big impact on our real estate markets. We'll obviously have updates out on that decision on this channel. If you want to get those updates, make sure you click, like, and subscribe. But for now, let's get into Toronto's data. First off, the benchmark price. The benchmark price, that's the price which represents the home with the most popular set of features. That price was down in August to $1,124,000. Down a little over $30,000 since July's $1,157,500. So that's a $30,000 drop in the month of August, down from a $47,000 drop that July saw from its previous month. So the pace of the price declines for homes in Toronto is slowing, but continuing nonetheless, with the one exception of the average price of a home in Toronto. The average price in August was $1,079,500, up from July's $1,074,000. A $5,000 increase in the average price of a home. And this is a big difference from the $67,000 price drop that we saw between June and July. So we are seeing a major slowing of these price declines in Toronto, and in the average price, we are actually seeing the price increase. A marginal increase, but an increase nonetheless.
Believe me, in a month we're going to be fine.
The median price of a home, however, was down. The median price, if you'll remember, that's where half as many homes were sold above that price and half as many were sold below that price. The median price of a home in Toronto in August was $930,000, which was down from $940,000 in July. However, that $10,000 decrease in the median price of a home was down from the $45,000 decrease in the median price of a home that we saw between June and July. So again, prices are continuing to fall, but at a much slower pace. The sales price to list price ratio was also down in Toronto in August. The ratio, if you'll remember, measures by how much a home goes over asking price. So if a home is on the market for $100,000 and it sells for $110,000, the sales price to list price ratio is 110. That ratio fell in August down to 98%, down from July's 99%. So on average, homes in Toronto are going for 2% less than asking price. So although prices continue to fall, albeit at a slower pace, we're seeing homes go for even less under asking than they did prior. And this is likely to continue as the months of inventory was up in August as well. The months of inventory measurement, that's if no more homes came to market as of right now. How long would it take for all of the homes to sell, for there to be no homes left on the market? That measurement, the months of inventory, was up to 1.3 months in August, up from 1.2 months in July. So the benchmark price was down, the average price was up by only $5,000, but up nonetheless. The median price of a home in Toronto was down. Homes are going for more under asking than they were in July, and we have 0.2 more months left of inventory on the market. So, given these major price declines that we've seen for the past few months that are still continuing, albeit at a slower pace, is now the best time to get into the real estate market.
Now do it, do it, do it!
There have been some that have been arguing that we could see a big uptick in demand come fall, as those who sat out during the spring and the summer months while the market fell jump back into the market, and wouldn't take too much of an uptick in demand for homes to sell much faster. A realtor on Global News was quoted as saying that if you do have the financial means to get into the market right now, then you're in a much better spot than you were a year ago, as the market is much less competitive than it was. And that's definitely true. Compared to this point in time last year, it's a much better environment for home buyers than it was. You can have conditional offers. They're definitely back and becoming the norm. There's much more inventory out there, and houses are going for under asking price, as we've just seen in Toronto today. So there's definitely some arguments saying that it's a better time to get into the market than it was a few years ago. However, although the buying environment might be less stressful than it was a year ago, it's still not clear that we're out of the woods yet vis-a-vis price decreases, and that there's a number of factors still continuing to push prices down. First, real estate prices generally don't do well in a recession, and Canada very well might be heading towards one very soon. Second, and most obvious, interest rate hikes, with the Bank of Canada set to deliver another supersized rate hike next week. This is going to put even more downward pressure on our real estate prices, as it's going to be even more difficult for buyers to qualify for a mortgage, especially those buyers qualifying with a variable rate mortgage. And finally, these interest rate hikes are likely to continue for some time. Federal Reserve Chairman Jerome Powell announced last week at Jackson Hole that the Fed is going to be raising rates for months ahead. Although Jerome Powell admitted that this is obviously going to cause some economic pain, he noted that the failure to restore price stability would mean far greater pain. So, by many accounts, Canada is going to be entering into a recession in the short to midterm future. We are seeing more interest rate hikes coming down the pike from the Bank of Canada next week. And with the bank usually following the lead of the Federal Reserve, it's likely these interest rate hikes are going to continue for the foreseeable future. All not great news for the price of Canadian real estate. With that said, as I always recommend, the best time to get into the market is when the price is right for you, when the home is right for you, and when it meets the budget. Every home buyer's budget is different, home buyers have different preferences, and the timing has to be right as well. And it's, as we've gone over on this channel before, it's almost impossible to try to predict the pace of interest rate hikes and to try to predict the pace of the real estate market. As such, if you do find the home that's right for you and the budget works and the timing is right, then it's definitely something to consider. On the other hand, if it doesn't fit the budget, then it's not the right time, then that's definitely not the time to get into the market, regardless of the prices. So we will continue to have updates out on the real estate market and on these price declines in the Bank of Canada's rate hikes going forward. If you want to get those updates, make sure you click like and subscribe. But for now, thanks so much for watching.